Hey, welcome. Today, we're cracking the code on what is, seriously, one of the most powerful tools in finance. We're going to learn the visual language of the markets, and that is Japanese candlestick charts. Okay, let's just dive right in. So, have you ever glanced at a financial chart and just thought, wow, that looks like rocket science? If you have, trust me, you are not alone. It can feel super intimidating, right? Like you need a PhD just to figure out what is even going on. But here's the secret. It actually comes down to two pretty simple things. Just two. If you can learn how to read charts and you can keep up with the news, you've basically got the core of financial analysis down. And today, we're going to master that first part. So, here's our game plan. First, we'll cover the real basics of charts. Then, we'll decode what a single candle means. From there, we're going to learn how to spot when the market might be turning around. We'll look at 3 key buy patterns and 3 key sell patterns, and then we'll wrap it all up with your brand new chart reading superpower. Okay, first things first. There are a ton of ways to visualize market data, but Japanese candlesticks, they are by far the most popular. And there's a really good reason for that. They're just the best way to see the story of a price, and more importantly, to spot potential opportunities. All right, let's keep going. I want you to think of each individual candle as, like, a letter in a brand new alphabet. Once you can read the letters, well, then you can start reading the words and then the sentences that the market is writing for you every single day. No matter how crazy a chart looks, every single candle is made of just 2 parts. You've got the thick part, that's called the body, and it tells you where the price opened and where it closed. Then you have those thin little lines, sometimes called shadows or wicks, and those just show you the absolute highest and lowest price that was hit during that period. Simple as that. And here's the first, most basic rule. It's super simple. Green means the price went up. The closing price was higher than the opening price. Red, that means the price went down. It closed lower than where it started. It's really that easy. Think of it like a traffic light. Green for go, red for stop, or, drop. Okay, so we've got the letters down. Now it's time to start putting them together to form words. See, when you string these candles together, they create patterns. And the most powerful patterns, the ones we're really interested in, are the ones that signal a big change in the market's direction. And this is why they're so incredibly popular. The real power here isn't just looking back at what happened. It's about getting clues for what might happen next. They're just excellent for spotting these major market turning points. But, and this is super important, no single pattern is a crystal ball, okay? You have to think of them more like strong clues. They're about probability, not guarantees. The best analysts always use these patterns along with other tools to really build a strong case for why the market might move. Okay, keeping that in mind, it really boils down to 2 main types of these reversal patterns. First, you have your bullish reversal. This pops up after the price has been dropping, and it hints that things might be about to turn around and go up. That's your cue for a potential buy. And the opposite, that's a bearish reversal. It suggests a price that's been rising is about to fall, and that's your potential sell signal. All right, let's get into the good stuff. We're going to look at 3 specific patterns that basically scream buy. Think of these as little stories on the chart that tell us the buyers are waking up and taking control. First up is a classic, the bullish engulfing pattern. Here's what you look for. You see a red candle, and then it's followed by a big green candle that just completely swallows or engulfs that red one. What's this telling you? It's a huge dramatic shift showing that the buyers just completely steamrolled the sellers. And here's a tip. The bigger that green candle is, the stronger that buy signal becomes. Next, we have the hammer. And honestly, it looks just like its name. A small body on top with a really long lower shadow. This candle tells a cool story. It says the sellers tried. They really tried to push the price way, way down. But then the buyers stepped in and fought back like crazy, pushing the price all the way back up. Now, a pro tip. It's always a good idea to wait for the next candle to be green. That's your confirmation that the buyers really won the fight. And for our third bullish pattern, we've got the morning doji star. This one is like a little 3-act play. Act 1, a big red candle shows the sellers are in charge. Act 2, you get this tiny little candle called a doji. That's where the open and close are almost the same, and it signals total indecision. It's like a pause in the action. Then Act 3, a strong green candle appears, showing the buyers have finally taken control. This is a really reliable buy signal. Okay, now let's flip the script. We've talked about buying, so now let's look at the signals that might tell you it's time to sell. These are the patterns that warn you the momentum is shifting and the sellers are starting to win the battle. Now, this one should look pretty familiar. The bearish engulfing is basically the evil twin of the bullish one we just talked about. You see a nice green candle, everything's looking good, and then it's completely swallowed up by a massive red candle. This is a huge red flag. It's a powerful sign that sellers have just taken over and the price is probably heading down. Okay, next up is the dark cloud cover. I love the name of this one. Imagine a bright, sunny day. That's your strong green candle. Then all of a sudden, a dark cloud rolls in. That's a red candle that actually opens up higher, but then closes way down, covering at least half of the green candle before it. It's a classic sign that, well, the party might be over. And our last one, the shooting star, it's pretty much an upside-down hammer. You've got this small body at the bottom and a long, long upper shadow. This tells the story of buyers trying to shoot the price up to the moon, but they get rejected. The sellers push back and slam the price right back down. When you see this guy at the top of an uptrend, it's a major warning sign that the price could be about to fall. And there you have it. We've gone through the whole thing, the alphabet, the words, and some really key phrases. And as you can hopefully see now, reading these charts, it's a skill you can absolutely learn. It really isn't rocket science. It's all about recognizing patterns and just understanding the story they're trying to tell you. Okay, let's do a super quick recap. Your new codebook. Ready? Each candle shows you 4 things: open, close, high, and low. Green means the price went up. Red means the price went down. Patterns can signal a market turning point. And the bottom line? Bullish means buy, and bearish means sell. Got it? So now you have the basic codebook. You can start to interpret the language of the markets. The next time you look at a chart, it's not going to be just a bunch of confusing bars anymore. Nope. It's going to be a story unfolding right in front of you. And the only question left to ask is, now that you can read the charts, what opportunities are you going to see?